Hey guys, welcome back to another video. Today we're going to be talking about a very important topic when it comes to trading. This is a topic that a lot of people get caught up on, and it is hindsight. Now, if you've ever heard the expression hindsight is 20/20, the whole idea is that it is very easy to tell you what the weather is going to be like yesterday, but it's a little bit more difficult to tell you what the weather is like tomorrow. The reality of the world is that we live in a place of many dynamic changes, and that actually happens in the markets quite a bit as well. And in today's video, I'm going to talk about hindsight and how it can be a really big dangerous thing when it comes to trading, and actually also how to avoid letting it dominate your brain when you are actually trading. So when we are trading, like the weather example that I just gave, it's very easy to tell what happened on the left-hand side of the screen. That is the stuff that already happened. But it's much harder to tell exactly what's going to happen on the right side of the screen, as this is the hard part when it comes to trading, is trying to actually find ways to make money by either looking to go with the right direction in the market or hedging or whatever you're trying to do. It is quite difficult to actually know exactly what's going to happen on the right-hand side of the screen. So a lot of times what traders end up doing is they get caught up in this I shoulda, coulda, woulda mindset when it comes to trading. And this comes back to haunt them. And honestly, in my YouTube comments, I get comments like this all the time. People saying, Nick, you should have held that trade longer. Or Nick, you knew it was going to come back down. You could have closed for a profit, right? Something like that. Something along those lines is a really dangerous language when it comes to trading, because what it does is it sort of encourages you to always sort of be second guessing yourself as a trader. Let's say, for example, that I'm long on a currency pair and the market has gone in my favor. And according to my trading strategy, which I have backtested and spent a lot of time doing, it tells me to hold on to that winner by trailing stops and letting the trade run. Well, then all of a sudden, the trade that I'm in completely turns back around and ends up stopping me out for a break-even trade. This has happened to me so many times in my trading strategy that at this point, I am completely prepared for it to happen, and it happens almost regularly. So that's something that I have sort of accounted for. But on my videos that I share of me trading live, I often get comments like, Nick, you should have taken profit. Why didn't you take money off the table? Why didn't you take partials? Why didn't you close it all out at the top? And I get these comments, and the reason I wanted to make this video specifically is because those comments, I'm used to them. I'm a YouTuber at this point. I've accepted my fate. I get comments like this all the time. You should have closed at the top and you should have taken profit. But the more important thing is for you guys at home trading, you're going to have this voice talking to you saying you should have closed, or you should have taken a double-sized position, or things like that. And that is actually a really dangerous voice to have in your head when you are trading, because even myself, after years of doing this in the markets, it is very easy for me to say play the should have, could have, would have game with myself. And the problem with doing this is that if you build that habit of always second guessing yourself and sort of going back on your rules because you shoulda, coulda, woulda, it can be really dangerous. Now, if you have a trading strategy where you take partial profits, or you have a trading strategy where you move to break even, or you have a trading strategy where you never move to break even, you just hold until it's either hitting your stop loss or hitting your take profit. The thing is, whatever you do, there is going to be holes in that logic. And in hindsight, there is always a better way to play it. When it comes to markets, you can always play something better. There's always a better way to play it. You could have sold at the better price, or you could have moved stops to break even to avoid that loss, right? There's always that shoulda, coulda, woulda voice. The problem is when you keep doing this, you'll end up changing your strategy constantly and never actually sticking a strategy out, which is imperative to actually trading success. So what I mean by this is that, one time you didn't move to break even, and you tell yourself, oh, I should have moved it to break even. Next time I'll move it to break even. And the next time you move it to break even, it hits you for break even and then flies in your direction. And then you say again, oh, next time I would have done this, right? And you constantly change your strategy. And as we all know, changing strategies all the time in trading is not a winning approach. As a trader, you want to be consistent, you want to be disciplined. And so what that means is that no matter what your strategy is, there are going to be times where it just makes you look silly and feel silly. And the point is, that's okay. There are times where I just take a break-even trade and watch the market go away without me. And if I sit there and always change my strategy because a comment says, Nick, you should have taken partials, you should have taken profits, you should have done this, right? Those should have words are really, really dangerous if I let them infiltrate the way I trade. And for you at home, that voice can be you talking to yourself. Next time I could have done this, I would have done this. Trading, like I said, it's done on the right side of the screen, not the left side. It's very easy to say you should have, could have done. If I was a genius, I would have, sold at the exact top, sold, closed back at the exact bottom, and always done that. But we don't have hindsight on our side. Especially on my YouTube videos, I get it probably worse than maybe some, just because as a YouTuber, I post up my trades and it's very easy for people to see what happened after the trade was done and then comment and let me know, oh, you should have just sold at the top where it was, clearly a top, right? It's not so easy. If it was that easy, like I said, we'd all be bazillionaires in our trading accounts. But as we know, trading is very difficult. And again, trading on the right side, very difficult. Trading on the left side, very easy. So with that said, I hope this message has been helpful to you. I do want to say that, again, hindsight is a dangerous voice, and you have to learn to just accept that sometimes your strategy, whatever it is going to have times where it just doesn't play out the way you like. And there's no way to play the markets perfectly. If it was that easy, like I said, we'd all be bazillionaires. So with that said, if you enjoyed this video, if this was helpful, hit that subscribe button down below. Leave a like on the video. Also, it does help to support the channel. We'll see you back in the next one.